Hello and welcome to this market special show on a Sunday, a hot blazing summer where a lot of masala and spice has been added by the latest exit polls for the 2024 Lok Sabha elections. A clean sweep. Prime Minister Narendra Modi, the Bharatiya Janata Party NDA alliance that has gone into the polls, all polls projecting directionally that the BJP is coming back, a hat trick for Modi, and two of those polls, including the most credible, the most well-known, most followed India Today, Axis My India poll, saying that ab ki baar 400 par is going to be a reality, a number that had caused quite a bit of doubt and a bit of a flutter on the markets. And there you have it on your screen, viewers, 543 seats, and the India Today My Axis poll saying 361 to 401. And if you take a look at all other polls, one thing seems to be a given, that the BJP is coming back, and coming back for a third term, a historic third term, both for the Prime Minister and for the Bharatiya Janata Party. And remember, 400, more than 400 has happened only once, and that happened after the brutal assassination of Prime Minister Indira Gandhi, and that was 414 with a 48.12% share. Narendra Modi in 2019 had got 37.7%, and the polls are projecting that this government will come back with a 40% plus share. And on this show today, on Sunday, a special show where we'll try and get you the pulse of the markets, how the markets are going to open come Monday morning. Will it be a gap up? Will there be short covering? And what will happen through the week, including on the 4th of June when the actual results start coming in? And through the duration of the show today, we are going to be joined by market experts. But to start proceedings today, I have with me our markets editor Shailendra Bhatnagar and our markets anchor Sakshi Batra. Welcome, Shail. Welcome, Sakshi. It's been a busy evening, a late night for all of us. And Shail, I'm going to start with you with the straight question. The markets were a bit skittish and a bit volatile through this extended election, and I think the way markets move, we saw a roller coaster of emotions play out on the Sensex as well as the Nifty. Now that we have the exit poll, Shail, what is likely to be the market response come Monday morning, Shail?
Good morning, Siddharth. Good morning, Sakshi, and a very, very warm welcome to all our viewers who've joined us on this working Sunday. So let me just begin with the good news, Siddharth. Remember, all of last week, the Nifty was down about 1.9 points, 1.9%, or about 470 points. And now, the moment markets open on Monday, 9:15, it's almost a given that you will see a gap up. The all-time high on the Nifty was about 23,110. That's most likely taken out on Monday itself for two reasons. One, the market was very, very light, and two, there will be an intense amount of short covering from our foreign friends who've been missing in action on the long side. So those gentlemen would be covering their shorts. There'll be a fresh round of buying because the depth and the extent of the mandate is fairly high. So you will see most probably over Monday or Tuesday the all-time high being taken out, and then there will be a euphoric blast on probably Tuesday. So parabolic trends for the Nifty over the next 1 or 2 days. That is what the basic assumption is that I have.
Sakshi, within the indices are many companies, of which many are considered to be modified stocks. The Modi pack on Dalal Street, on the Nifty, so to say. These are actually, viewers, stocks that are closely linked with the investment, spending, expenditure priorities of the administration for the past 10 years. That's the real economic linkage, and we leave political speculation aside. Sakshi, what's your own assessment? Shail spoke about how Tuesday is likely to be for many of these counters, but specifically, what can you tell our viewers about how the market response for some of these specific stocks is likely to be?
Absolutely, Siddharth. Very good morning to both of you and to all our viewers as well. Well, ab ki baar 24,000 seems to be the mantra that Nifty bulls will be yelling,
Ab
and
ki
the
baar
markets will be.
24,000. That's a good one. Let's try and bring that up on the screen. We'll request our producers to do that. Go ahead, Sakshi.
So we already have 23,110. I'm sure Monday morning we will be testing that all-time high that we have seen. It may go beyond it as well. Most of the technical analysts and experts I've been speaking to are saying 23,500 seems to be coming. After that, there could be some, profit booking, because again, the real numbers will come in on Tuesday. So some volatile action in the second half, but then thereafter, if the final results meet our own estimates of 400 par, 24,000 is definitely coming in the bull case scenario for all the experts and from all the experts who I've been speaking to. Now, you did talk about the PSU stocks, which are largely called as the Modi stocks now. In the election season so far, Siddharth, we have seen that PSU stocks have created 7 lakh crore rupees of wealth in this election season. The BSE PSU index has rallied in the market cap by 7 lakh crore rupees. Stocks have rallied up to 87%. Of these, Cochin Shipyard, Bharat Dynamics, Mazagon Dock, these have been blowout performers, and we've been discussing agnostic these kind of stocks over the last 15 days with the kind of wealth that they have created. CLSA has pointed out, if Modi is coming back with a big bang, these are the stocks that will continue to gain investors' attention. So defense, railways, infrastructure, PSU banks, this is going to be the key focus of the markets.
Siddharth, let's get this whole argument in place for a moment. My suggestion is, for the sake of our viewers and for those who will be joining the market from Monday onwards, remember, a record high on the indices is like a lightning rod on the top of the Bombay Stock Exchange building, and that attracts lakhs and lakhs of new viewers. Now, put us in shape as to why this has happened. I am actually in awe with the depth and extent of the exit poll enthusiasm that you see for the BJP. But how did this come about?
Well, that's a very big question, and I'll try and do that very quickly. I'll request our producers to try and bring up some of the poll related, including the poll of polls graphics if we have them. Really, Shell, and before we go to our guests, our market experts, a quick recap. There's a long 10-point list that I kind of came up with in the morning, but take a look there, viewers. If you see, what is the key? Don't worry about the ranges. Don't worry about the specific numbers. Look at the direction. The direction is very clearly that all polls, including many local polls which have not made it to the screen here, done by well-established establishments, media establishments on a regional basis across this country, everybody is directionally saying that the BJP is returning. And if you now take a look at that one big battleground state of Uttar Pradesh, that's it. This is the India Today My Axis projection. Stay with that there. 46% projected vote share. Look at the gap and the differential with the challenger, the Samajwadi Party plus allies, and look at it in terms of the number of seats. 6 seats being added, close to 10% addition in terms of the seat share, and you can see the vote share increase. So Uttar Pradesh, let's take a look at West Bengal now. There's just some of the seats, states where there was a massive battle. Take a look. The BJP's projected vote share rising by to 46% and the TMC losing votes there. And in terms of the seats, 26 to 31, that's an addition of 10 seats. And remember, West Bengal has been a battleground state from 2019 onwards. Quick look at Bihar on the screen for you viewers. Again, BJP 21% vote share, JDU 19%, LJP 6%, Congress 10%, RJD 24%. RJD was the main challenger. Remember, in Bihar, we saw that alliance with Nitish Kumar, which surprised many analysts. But look at that. When you tally these numbers, you will realize 29 to 33 for the NDA. Now, this seems to be a decline, but remember, in terms of the vote share, these additions can have a very significant impact. Let's bring up Karnataka now on the screen. 20 to 22 again, a bit of a position where in this state we believed and in the run up to the polls had many estimates suggesting that the BJP was on a back foot there. Rajasthan also, let's bring up another state. You can see the project taking a bit of a dip there, but not a massive loss. Andhra Pradesh, now this is assembly projection and not the Lok Sabha projection. So Shail, just to wrap this up and to bring our guests in on the show who've been waiting by, it's very clear, and I want to just say that to me, if we were to try and explain this in market terms, Nvidia, a company that till a few years back very few people knew about except those who were deeply involved in the gaming industry, and the dominance of Apple and the dominance of Microsoft.
Yes.
2014 onwards, and I'm going to go out on a limb here, 2014 onwards, we have seen the same kind of shift politically that we are now seeing in terms of technology, in terms of high cap stocks moving away and breakouts happening. So you have to take a long-term view. This process of the BJP's dominance on India's electoral map started in 2014 and 2024, 40 quarters after Prime Minister Narendra Modi first took power. We are going to perhaps see a big fundamental shift in a country with 968 million eligible voters. Let's introduce our guests at this stage. We have Feroz Aziz, the Deputy CEO of Anand Rathi Wealth, one of the most well-known commentators in the market. We also have Mayuresh Joshi, Head of Equity Research at Wilm O'Neill in India. We also have Arun Kejriwal, market expert. And quick question to Arun to start with. अब की बार 400 पार कितना होगा निफ्टी और सेंसेक्स पार?
क्या
That's a nice one. And I want to take you back 5 years when in the 2019 election, you had pitched me with all the Delhi-walas, political experts, and asked me, what's your take on the
I'm glad you
BJP?
remember that, Arun.
Absolutely. So I came out with a number of 330 for the NDA, and all other people in the hall went wild. And fortunately, I was in Bombay, they were in Delhi. Otherwise, I'm sure I would have been out of the window. Coming back to your question, well, 400 is a number which we will know only midway through trading on Tuesday. While it will have its significance because it was a poll campaign that the Prime Minister had launched, what is significant is the confidence with which they are now approaching this number or close to it. I believe that gives the intent to the market. All the so-called people who are identified as Modi Bhakts, I believe what is important from their perspective is that it ensures that there would be a continuity of policy. The extent of expenditure on infrastructure, on improving the facilities available in the country, whether it is railway, ports, airports, you name it, is not going to stop just because we have reached some milestones. I believe the emphasis on Make in India and some other projects which have helped India grow its GDP, the GST collection, all of this put together is going to ensure that we stand on a positive wicket as the third innings unfolds.
Okay. Namaskar, Arunji. And of course, we have our very dear friend Feroz Aziz, who creates wealth for millions and millions of his customers, and our very dear friend Mayuresh Joshi on the panel. Feroz, coming to you. And Siddharth and I were just discussing this before this wonderful show started, that over the next 5 years, the amount of wealth creation that Indian markets will exhibit will pale into insignificance the previous 10 years that we have seen. How do you see this rally panning out beyond the first 1 or 2 days or the first 1 week? How do you see the markets now from the macro point of view and also over the medium to long term, 3 to 5 years?
Siddharth Sahab, Sakshi. Basically, like you said, Sahab, this is a moment not just from the next 3-4 days perspective, 5 days. Those are going to be very interesting days. If you reflect back from 1999, those are interesting days. I think 3 things which will happen, and those were important to happen. One is there was a formation of a paradigm shift between debt investment being moved to equity. So the continuity of the government was very critical for this momentum to continue. See, India has about 800 lakh crores of household savings, out of which 3.2% is in mutual funds, 3.2% is in direct equity by individuals. If only 6.5% of the total household savings is in equity, then you needed that kind of momentum to continue. So that will continue. That's point 1. Point 2, I personally think the first 3 or 4 days could be about the largest stocks. But I'm now reasonably confident that the broader markets, which is small caps and mid caps, which continue to rally, will further outperform Nifty. That's point 2, because India has very little free float in these segments. 2.5 lakh crores is there in small cap funds, and that's very small amount. That's 0.3% of India's household savings. So there is very little free float available of small caps, especially in India. So there is going to be re-rating again upwards. Of course, there may be astronomical valuations in some stocks, but that will continue. That's point 2. Point 3, I think the capital market infrastructure will get a larger emphasis this 5 years.
Okay.
So these are the 3 important things which I believe will shape the next 5 years. So I would not be surprised if Nifty delivered 12 to 14% and the broader market delivered 3 to 4% more over the next 5 years compounded, which means that Nifty could double in 5 years, which I think is a great start point for anybody to invest capital.
Okay. Let's get Mayuresh into the conversation, and before I take his view on how sentiment over the next 2 or 3 days in particular will shape up on Dalal Street. Siddharth, I'll just request the PCR to fire the graphics that we show on how Sensex returns shaped up on the day when exit polls have been announced, as also the election results day. And Siddharth, I'll request all our viewers to focus on 15th of May 2009. This is the day when the Sensex rose 17%. Siddharth, what is critical is that on this day, the alliance, the Congress-led alliance had won the election with just 262 seats.
Yes.
And now let's look at the exit poll that has come in yesterday and look at the lowest picture that the BJP and the NDA alliance will get. That's about, let's say 340 seats. So 340 versus 262 and an uptick of 17% on 15th May 2009, and we are waiting for June 3rd. Now let's get Mayuresh into the conversation. Mayuresh, 2 weeks ago I had requested you not to shave off your goatee because this was something that was attracting the bulls. I hope now you are firmly convinced of my how should I say contraindicators in the market. Your expectation of what will happen on Monday and Tuesday.
Morning Shelji, morning Sakshi, morning Siddharth. So Siddharth, Shell has made me grow the beard and I think the beard will last till the bull market lasts. So I think I'm not going to take this off. So that's how we feel about the bull market. So this is going to continue. Obviously, I think the reaction, if the numbers are supposedly held true on June 4th, the reactions of the markets is going to be positive. You expected to see a first-hand reaction tomorrow itself.
Yes.
Now, in the system, 3.2 lakh contracts are net short, Shelji,
Yes.
Siddharth and Sakshi. So there will be some element of short covering that is bound to happen tomorrow based on exit poll numbers. And this will translate even more as actual numbers start flowing in on June 4th. So again, I think a 4 to 5% bump up at least on the Nifty over the next couple of days is not ruled out, if not more. What do investors do after that? I think the scenario that Arun and Feroz were positioning as far as the Indian economy is concerned from a macro standpoint obviously holds true. I think a couple of data points which are even more important is the infra spending, which is around 200 to 50 odd billion, is expected to double in the next 5 years. The discretionary spending from $500 is expected to triple in the next 5 years, and the per capita income at $2,500 is expected to reach $4,000 in the next 5 years. So this is a very obvious sign in terms of how the micro positioning of India is. Corporate earnings as a base case scenario is expected to grow between 12 and 14% for the better part of the next 2 to 3 years. And therefore, if you start pegging in how valuations are probably placed to the rest of the globe, obviously economies like Brazil, China, on a forward multiple basis, if you assume the PEG ratio, are cheap compared to India, but they've got their own sweet problems being commodity markets. And therefore, I think the other markets like Korea, if you're probably looking at, you're looking at Vietnam and the other developed markets as well, the premium valuation justifications are probably held to be true based on both the macro and the micro picture. Shelji, you were mentioning 2009 scenario. Obviously, in 2009, I think we are coming off the global economic crisis. Corporate earnings were at an all-time low. Valuations were not that expensive. It's not the scenario this time around. Therefore, to assume a upper circuit for the markets seems unlikely, but you never know. But the optimism stays as a bottom line for the India growth story over the next few years.
Capital GDP is at 1.4, which as per the Buffett indicator is a stretched valuation. I want to ask you and get it out of the way for the larger viewers and investors who may be still sitting on the sidelines, many of those who were fence sitters amid the last 10 days volatility, wanting to pump in money once the results are out. I want to understand from you, kahin ye buy on rumor and sell on rice to nahi ho jayega situation.
So that's for me, Sakshi, right?
Mayuresh, yes. That's a
Yeah.
question for you.
No, there is nothing like buy the rumor and sell. I mean, it's all factual, right? And the facts are going to get laid on the table. And what the market will probably look at once the numbers are out. So once June 4th is done and dusted with, and we enter into trading days on June 5, 6, I think the election mandate is out of the way. The markets will then look forward for in terms of what the Modi government, assuming the numbers coming through, has to suggest over the next 100 days as an agenda. And what probably comes through in terms of the budget, which is expected to be a full-blown budget in July. Yeah. So what kind of measures are probably taken is going to be extremely critical. Obviously, the bonanza that has been received from the RBI, the excess 1 lakh crore, will be put to good use by the government in terms of either reducing the fiscal deficit numbers or putting this a part of that in terms of the infra and the capital good projects in terms of infra spending. Again, at some point of time, you're expected to see rate cuts happening at the end of the financial year or the end of the calendar year as the scenario unfolds. And therefore, I think the mix of expectations post the mandate will be on how policies are probably getting formulated in terms of the aggressiveness from a government side, how private capex comes through, which in our opinion should come back very, very strongly over the next few quarters. Will corporate earnings keep on growing at 12 to 14%, which becomes a base case scenario for the markets? And in our opinion, they should as well over the next few years. And therefore, a combination of all these factors will probably ensure the premium multiples probably stay put. Obviously, there will be an element of profit booking that will happen over the next few days, assuming what happens in terms of the budget or the 100 agenda. And therefore, I think investors should probably have a staggered approach in terms of government-focused sectors, infra, manufacturing, ancillary sectors in the power space, real estate ancillaries, and even BFSI space.
Right. Arun Kejriwal, I come to you now. In this long drawn extended election cycle, we saw various emotions play out. FPIs had a certain approach towards the market, domestic investors, large institutional investors had a certain approach, and the retail segment, which has grown over the last few years, also had a different approach. How should the retail part of the viewing public, the investing public in India, approach, for example, PSU stocks as trade begins tomorrow?
So what has happened over the last 12 months, if I could say, the PSU as a pack has clearly outperformed. And there have been three broad themes within the PSU pack. One is the so-called defense stocks, which would cover the aerospace, HAL, BDL, that is the shipyard companies, Mazagon Dock, Garden Reach, Cochin Shipyard. And then you have the PSU pack. The banking pack, that is the PSU banks. And the third element that comes in is the railway pack. All of these have had different kinds of success, but nothing has underperformed. Investors believe the government is giving back money from companies which were nationalized 30, 40, 50, 60 years ago. It's not so. The performance of these companies has changed. That is what is being reflected to a great extent in the price. And the remaining, what you are seeing in the market is more of euphoria, optimism, and the herd mentality, if I can use the word. Coming to your question, what should investors do tomorrow? Like you and I were talking when the show began, that the previous all-time high at 23,110 is an immediate target. The all-time highs of these individual stocks would be in the retail investor's mind when market opens tomorrow, stating that this is my first target. After that, we'll look for new highs. I believe a certain amount of caution needs to be exercised because valuations in some of these stocks are already high. They are irrational. And I would like to point out as an example just one stock. IRFC is not a railway stock. It's a company of the Indian government which arranges funds for the Indian railways. It doesn't have anything to do with railway procurement, distribution, or any such infrastructure activity directly. If this stock, instead of trading at a price to book, which is the conventional way as a lending institution or a banking institution would trade at, this starts trading at something like a IRCON or a RVNL, which are infrastructure construction companies. Something is amiss. But because the pack has been put as railway, it moves in that way. Similar example, IRIDA. IRIDA is also a finance company, but its price to book is probably competing with the likes of an HDFC and Axis and ICICI. Caution needs to be exercised.
Before we get Feroz into the conversation, who's going to construct a lovely mutual fund portfolio for the next 5 years, Siddharth, to buttress what Arunji has said and also to get in sync with your thoughts on the PSU stocks, I'll request the PCR to fire the CPSE index chart, which we have created for our viewers in the form of a monthly movement. That will be there in front of you in a while, Siddharth. We've had 22 weeks of trade so far in 2024, Siddharth, and such is the enthusiasm and mad rush for PSU stocks that this index has appreciated 33%. So
and perhaps, Shail, at this point of time, should there be fear of missing out for more driving investors, or should they actually exercise some caution? Because what Arun Kejriwal was saying, and I was trying to sort of look at the fine print of his words, perhaps caution is also warranted at this point of time. Arunji, would that be a fair statement to make?
Absolutely. I believe caution needs to be exercised. And please understand, it's your hard-earned money that you're investing. It's not that the money has been given to you by somebody else. If you don't take care of your money, somebody else will willingly take it away from you.
You know, there is this lovely saying, Siddharth, in the markets that a fool and your money are soon partners. So please be aware of, this age-old wisdom. And that is the reason why we invited Feroz
But
Aziz.
equally, Shell, money frees you from doing things that you dislike. So, the thing about money is it may not buy you happiness, but it can certainly buy you everything that can lead to material happiness at least.
and you know, that's the reason why we have the wealth creator Feroz Aziz with us. There was a specific reason to invite Feroz, and that is that on a Sunday, when you have had your evening tea, listen to the funds that he's just about to going to talk about, and that will create, ladies and gentlemen, a very nice portfolio of mutual fund equity schemes for you. Remember, participating in direct equity at this kind of a moment might be hazardous to your financial health, but it's equally beneficial to use the mutual fund route. So Feroz, now dipping into your expertise, tell us 3 funds. One, the allocation that you will have in those 3 funds between large caps, mid caps and small caps, based on how you expect the market to be over the next 3 years, and what will those 3 equity schemes be. If you could just share the names of those funds, Sakshi and I will ensure that from Monday onwards we will dissect those funds in great detail, but if the names that you can share.
Yes, Shailji, like you rightly pointed out, what happens is direct equity is, for most people who don't do this as a profession, is not needed. When we started analyzing top 10, top 100 broking clients of ours, transaction-wise, how many are beating Nifty, how many are beating counterparts of mutual funds, you would be surprised 91% of direct equity investors as well, not just traders, underperform the mutual fund basket which we recommend. Because most people who manage their money, they see the winners. Psychologically, your mind tells you to see winners. And the ones which are down, you're always worried. And you will say that, yeah, aa jayenge upar. So point 1, I really propagate mutual funds from a sleep easy, still make 15-17% kind of compounded return. Of course, now you're very curious to know which are my 3 schemes. So I'll probably give you a little offbeat because we are in the process of redesigning our model portfolio every first quarter of a financial year. So quant large cap. See, large caps stocks have found it very, large cap fund managers have found it very difficult to beat Nifty, except Sandeep Tandon. Sandeep Tandon is running a very, he was a treasury guy who's the CIO and also the promoter or the founder of Quant. He is a very treasury mindset guy. He has only 17-18 stocks in the large cap category, also uses derivative to hedge his positions. In the last 1 year has changed, out of his 17 stocks, has changed 14 stocks. So he's very dynamic because he uses derivatives in terms of understanding what its spillover on cash market. He's able to use liquid counters much better with his agility. So I would say he beat Nifty last year by 20% in a large cap fund. I think that will continue. So quant large cap would be a reasonable proportion. In the mid cap category, again, little counterintuitive it may sound, Kotak Emerging Equities Fund, Pankaj Tibrewal left that fund. It underperformed its own benchmark by about 19% last year, but that's a very clear case of mean reversion. It's underperformed, but the change in the portfolio is low. So those are stocks which have not performed. And last 2 years, value itself has turned itself into growth. And those whole words of value and growth have become obsolete. So I think a great play in the mid-cap space for mean reversion is Kotak Emerging. Atul is the new fund manager, and I've gone through his track record of making decisions, and that seems fair. On the small cap category, I would say Invesco Small Cap. Invesco Small Cap is personally managed by Tahir Badshah, who's the CIO of Invesco. And if you look at its size, I think it has the size advantage. In a small cap fund, you would see that there is a lot of difficulty in moving the top 10 positions as soon as you move the 10,000 crore needle. So I would say Invesco Small Cap. These are the 3 funds, all trying to give you a flavor. So 50, 25, 25 to be more specific in terms of the weightage which you asked for.
50, 25, 25, large cap, mid and small, right?
Yes, sir.
Okay. Let me just give you a bare bones data structure on quant large cap fund. Sakshi and I will be discussing it on Monday. Just 15 rupees NAV, and this is something should be a part of your large cap portfolio if you don't have a fund as yet. Kotak Emerging Equity Fund has a net asset value of 132 rupees, and Invesco Small Cap Fund has a net asset value of 38 rupees, it manages somewhere like 3,965 crore rupees as of now. So this, ladies and gentlemen, is a small portfolio. You can start even today evening and then maybe benefit it over the long term. Remember, mutual funds work best if you put in an SIP on a monthly basis, and they work super well if each year you increase the SIP by the salary increment that you get from your employer. Mayuresh is back with us. Mayuresh, any favorites for Monday and Tuesday in terms of stocks that you would be looking at? You remember, I have this list of every stock that you mentioned on Business Today. Maybe I'll refresh your mind. Bikaji Foods, Welspun Corp, Bama Lorry come to my mind immediately. But what looks good?
So I think a few of the cement names, Shell sir, should be kept on your watch list. So large cap names where leadership position will continue. Names like Ultratech Cement, ECC will clearly benefit in terms of the government moves going forward as well. Rural, urban, affordable housing, infrastructure growth, the kind of supply and demand numbers that are coming through, the expectation is demand will exponentially grow over the next few quarters, leading to better capacity utilization and therefore better realization numbers. Even if input costs move higher, that will be passed through because of the increasing demand, reflecting in better EBITDA numbers and a better EBITDA per ton number as well. So I think a few of the cement names should be definitely on your radar. A few of the power ancillaries is also something that we continue liking. Obviously, the huge play that is expected to happen in terms of data centers, in terms of expectations of the flue gas desulfurization equipment, which needs to be incorporated before March 26 as the final deadline. There's a 1 lakh crore market out there. So I think any declines on stocks like Powermech, Techno Electric, HPL Electric, which is also a huge proxy in terms of smart meters, wires and cables, can do well. A few of the banks are expected to do well. So I think some large cap names that should be on your radar, ICICI Bank, State Bank of India, should definitely be there. And obviously, I think a few of the discretionary stocks, which might be a few of the auto ancillaries as well, which can show a bump up. So I think the whole market will probably move, Shelji, but I think a few of these names where earnings should also hold up can be looked at from a watch list perspective.
Mr. Kejriwal into the conversation when it comes to the stocks that investors need to keep an eye out on now, not just for the short term, but in case we are already looking at a Modi 3.0, what to play for the next 5 years. Mr. Kejriwal, we've discussed PSUs, we've discussed railways, defense, we've also discussed some of these infra names that Mayuresh has talked about. What about the large conglomerate-related stocks, Tatas, Ambanis, Adanis? How are those likely to perform over the next 4 to 5 years? Will this space be an important one for you to deploy fresh money? Would you advise that?
A very good question, Sakshi, and I believe you've hit the nail on the head. So the money comes from the people who have the money. So one of the third name that you took, Adani, was down and out for literally 12 months. He's bounced back. People are talking of green energy, hydrogen as the buzzword. I believe if somebody is a risk taker and wants a risk-reward ratio, which is, say, something like 6:1, Adani Enterprise is a stock which he must have in his portfolio. All that the stock has done in the last 12 months is come back to levels where it was when the FPO came. The entire rally over the last 15 months has kept this stock as such. I believe this is a stock which one should look at. If one looks at individual areas of or counters where one would be bullish, I like stocks from the housing finance segment. So something like a a PNB housing, a LIC housing of yesteryears, recently listed BlackRock company, Aadhar Housing Finance, the real estate space, somebody from the NCR region, a TARC, maybe a Signature Global, which is into the affordable housing. these are some names which come to mind. Recently listed companies from the healthcare space, a Innova CapTab, a Blue Jet, a Concord Bio are companies which can give you, if we set the benchmark, as Feroz said, that the Nifty doubling in the next 5 years, what you're talking is that the stock should double from these levels. I believe the names that I have taken are candidates which could probably treble in the next 5 years going forward. Some of the hotel companies look very, very interesting. Maybe a Sami Hotel, a Juniper, which has just come. So these are individual names where one can look at them and invest. But please understand, names are being recommended not for a Monday or a Tuesday, but for a 3 to 5 year horizon.
Absolutely. Let's get this overarching theme in place. Ladies and gentlemen, are already upbeat there. Most of the indices, apart from the Nifty Bank and the Nifty IT index, are already at record highs. Whatever we discuss here is meant for a 3 to 5 year horizon, and more importantly, you have to take another view from an independent financial advisor should you want to act on these names or on these funds. Coming to you, Feroz, and a word of caution I'd like to request you to make on the kind of sectoral and thematic funds whose NFOs have sort of sprung up like, how should I say, green shoots across the Lal Street. Is this a trend which is indicative of probably an intermediate top in the market, or you think that the markets are now mature and independent enough to address this kind of a theme as well?
Shelji, you rightly pointed out there's so many NFOs coming up. So I personally think that firstly, if you go into a sectorial fund, you have to remember that the fund managers who are running diversified equity funds know that already. So if a Sandeep Tandon in his quant large cap wants to buy manufacturing, he's going to buy manufacturing and consumption. I was speaking to him yesterday. He says all the consumption names are with me, right? So he wanted to poise a little safer during the election period. So please don't think it is mutually exclusive information available to you, right? It's available to a diversified equity fund. This is the mistake which people did in 2008. The fund managers themselves had skewed their portfolios to before 2008 crisis. 50-55% of diversified equity portfolios were in infrastructure, and clients would buy 20-25% of more infrastructure. So 80% of one's equity portfolio was in infrastructure. And then if infrastructure actually goes down 80%, you can't cry on spilled milk that how can I lose so much money? So sectoral funds, only if those sectors are underexposed in diversified equity funds would you want to add and get that extra exposure. So those are to calibrate extra or reduce exposure to specific sectors, and they're not independent decisions, sectoral funds. Second point, which LG said, see, mutual funds have their job to complete their bouquet of products. It's not your job to participate in their completion of their bouquet. SEBI has given the restriction of how many schemes can be launched. If they've launched all the schemes in the other categories, the only thing they're left with is sectoral funds. So they're going to launch sectoral funds. You're not going to buy a rose from every bouquet a florist is going to have in his store. So you have to fill your portfolio. They have to fill their product portfolio. And there's no marriage there.
Absolutely, Feroz and viewers, I already have 3 or 4 action points that our market masters here on the show have spoken about, and all of those, including a Modi 3.0 portfolio, stocks for a modified Monday, the Tata Ambani Adani pack, and Nifty doubling in 5 years. You will get to hear these expert views on videos that will be available on Business Today later on during the day. Please do play them again and again, because these are words of wisdom that will help you save, invest and prosper. But Shail, as we get into the last leg of the show, I just had one sort of broader question for the markets, and maybe our experts can also weigh in. But Shail, FIIs have close to $800 billion in Indian stocks, and if the markets go up 2%, they'll make 16 billion, for example. But given the overall FII approach in the recent past, what do you think will happen, especially given the positions that they have taken during the election campaign period?
Siddharth, this is a very interesting question, and you know what will happen. This 23,110 that is most likely over the next 1 or 2 sessions will happen because of intense short covering by our foreign friends. You see, they've missed this rally, and if you look at how FY24 shaped up, the FII investment in India was the lowest in the past 5 years, and this is a time when Indian equities have probably made the best money in the shortest possible duration. So the fear of being missed out will be felt across the investing world in Southeast Asia, in the Middle East, as also in the Western economies. These people are likely to come up with bagfuls of dollars and buy into Indian equities as ferociously as they sold in the month of April and all of last year as well. So I am actually banking on the fact that you know, DIIs and mutual funds who hoarded on all these stocks and you know, had this festival of buying into Indian equities over the last 24 months will now sell these equities to foreigners. The foreign ownership of Indian equities, Siddharth, is at a multi-quarter low, and if you believe a foreign brokerage, there is this view that each week you will get $2 billion in foreign institutional inflows on Dalal Street. So I am very, very hopeful that FIIs will buy from DIIs, ultra HNIs, and of course mutual funds.
That's a good point there, because very clearly, viewers, on June 4th, one of the things that will get confirmed is the love of the Indian middle class with Narendra Modi. Let's make no two bones about it. Labhartis, caste dynamics, and all the other dynamics that we see in the rough and tumble of an Indian election. The fact is, over and above this, if there are 280 million poor people who have been benefited by so many other schemes and a big chunk above them, there is a broad middle class vote which I believe has stood solidly behind Modi, and in some ways, Shail, that middle class is also in love with SIPs.
Yes.
And is therefore delivering a bit of a surprise to all these big time global investors who have this massive amount of money invested in the market, Shail.
Siddharth, you remember in the 1990s the FMCG industry was sort of changed by this small sachet that we saw of shampoos and soaps. It was a rupee sachet, and that changed how people used to use shampoos in the lowest pyramid. Now the same thing over the next 5 years will happen because of the jam trinity in the mutual fund space. I am sure Feroz will agree on this one, that you will see a plethora of funds coming in with options to have a 500 rupee SIP, even less. You know, a lot of funds even now have a 100 rupee SIP to attract this lowest strata of society. A very quick one from you, Feroz, on this one. Time is really short.
13, 14, when the SIP number was 1,500 rupees a month, we had predicted about 5,000 in about 4-5 years. So I personally think, I was looking at March 25,000 crores per month. I think that will be taken. I think by 2028, 29, by this the third term or Modi 3.0 is over, I wouldn't be surprised if it's 60,000 crores per month of SIP money in mutual funds from the 21,000 which it is currently, because the number of mutual fund investors are significantly lower than demat account holders itself in the country. So I think there's a huge penetration possibility, and that will happen over the next 5 years. So 50 to 60,000 crores of SIP per month, which is more than $5-7 billion a month, is going to come from the lower strata of India.
क्या बात है फिरोज जी, इसी बात पर आपके लिए घी और शक्कर भेजेंगे मुंबई. With that, ladies and gentlemen, let me just get another angle to this lovely discussion that we are having. And a lot of people seem to have missed out the fabulous macro data that came in over the last 1 week or so. Remember, we were so tuned to the Nifty falling over the last 5 days that we missed some of the greatest numbers on GDP, on fiscal deficit, and of course the GST number. Siddharth, what do you think of these three great numbers that have come in over the last 5 working days?
Very clearly, if we take the COVID period as a cutoff and don't go back further into the past, there's a complete structural breakout as far as India's macro is concerned, and the world is taking note. So you spoke about what happened. I'll just recount a few. S&P going positive. Very clearly, the RBI's dividend, and that RBI dividend chart we should try and bring up on the screen again, is going to further help convince the global rating agencies, which I think have been blindsided for some reasons and have perhaps only looked at India with a myopic view, especially the fiscal consolidation, fiscal overall management strategy in the last decade. And now they will be forced to look at India afresh. That's point number one. Shell, just as domestic investors whose love with fixed deposits is perhaps now waning and they are moving into equity through the sip by sip route, taking sips of tea, as far as mutual funds are concerned, I think there is going to be one change. That's just S&P. Now take a look at gold being brought back. Many of you might say, what is the direct correlation with the market? Some who know the subject might try and go into deep details with what will happen as far as Forex is concerned. But what's the broader message? The broader message is of India and how much it has transformed in the last 3.5 decades. And that will set us up, Shell, because we are running out of time, for a budget which will now be looked at very, very closely. After the political stock exchange numbers are done and dusted on the 4th of June, a month later or thereabouts, 4 or 5 weeks later, we will see a big set of numbers which, according to me, will be the fiscal roadmap for the next 5 years of Modinomics. Already we know that the government secretaries, special groups of secretaries, have worked over the last 2 months on what is promised to be a 100-day agenda. And in fact, Prime Minister Narendra Modi, in his interview to the India Today group, had spoken about going not just within that 100 days, but also a special package for youth. So the next 3 to 4 months, beginning with the budget and perhaps even earlier, are going to be action-packed as far as the government's roadmap is concerned, and you will therefore see greater clarity in terms of, for example, the PSU pack, the banking pack, the infrastructure pack, and other areas where the government's dominance in many sectors still influences the direction of stocks. Shell.
Siddharth, let me just end this show on a wonderful note. This is data sent to me by Mayuresh just now. The latest number for UPI transactions for the month of May is now at 20.45 lakh crore rupees, Siddharth. This is up from 10 lakh crore rupees in May 2022. Thank you, ladies and gentlemen. This has been such a lovely discussion on how the Lal Street will shape up over the next 1 or 2 days, over the next 3 years, and over the next 5 years. Thank you, Arunji. Feroz, it has been a pleasure. And Mayuresh, as usual, it was your goatee that did the magic as far as exit polls were concerned.
And let me remind our viewers, there will be continuing coverage, including Monday morning onwards, where we'll get you many more market masters to help you make decisions that are rational and that are founded in credibility with credible numbers. And just as the India Today My Axis poll has a status of its own as far as exit polls are concerned, I believe the guests that you are seeing now and going forward on Business Today Television, on our flagship Market Today show, and also on BT Bazaar, our Hindi offering, will add value to all of you as investors. Once again, thanks to the entire panel, Arun Kejriwal ji, Mayuresh, Feroz, my colleagues Shell and Sakshi. We'll see you again tomorrow. Until then, goodbye.